So the headlines today, all across the board, of course, the new tariffs that are going to be imposed on another $200 billion worth of Chinese goods. And we'll also hear from Fang Qinghai, senior Chinese official, CSRC vice chairman, was saying today this could knock, this trade war, if it's not resolved soon, could knock about 0.7 percentage points off Chinese growth. That could knock it below 6%, as David, our anchor, just said. What would that do to your outlook on the Chinese economy?
I think the Chinese economy on the whole used to depend on the export, investment, and also the consumption. Nowadays, the export part, we're going to face some short-term headwinds. I think Chinese government already started having this policy easing, so drive the kind of economy growth with more investment, infrastructure, etc. Then the domestic consumption will take some time, but it's recovering.
But that kind of kills the deleveraging aspect that they've been trying to delever in the Chinese economy. But if they need to stoke other parts and go back to the old cocktail, and that is spend on infrastructure and the like, doesn't that exacerbate the domestic problems?
Well, actually, the deleveraging, although it's cross the border, primarily focused on overcapacity traditional industry, so you're right. But infrastructure investment nowadays tend to be more focused. Certain required or necessary infrastructure, such as high railways, kind of project, and some other that is useful and may stimulate the further domestic consumption, because domestic tourism, for example, is one of the high growth area, as well as we see the holiday economies in China, which is soon coming, the next National Day holiday, right. Golden Week, right?
October 1st.
So I think Chinese policy easing, we do see that will offset to some extent the negative GDP impact that you talked about. I think we estimate even the full-blown President Trump's announced the trade war may knock off between 0.5 to 0.7. However, the policy easing may bring back another 0.3 or extra. So we do think the overall economic growth will slow down a little bit from last year's 6.9 to say this year, say 6.5-ish.
So still above 6?
Yes.
What kind of retaliation do you expect from the Chinese?
I think Chinese is really saying that we don't, other than announce the tick for tat kind of
they can't
tariff.
Match it.
However, where the size is different. However, China will say we continue to stand for, we open the more market to the international investors. We want to develop our economy. If anything, we want to reduce our reliance on the export to the U.S.
But
things like that.
But isn't, of course, market opening, that's all in implementation. They've announced that they're opening up financial services to the foreign companies up to 51%. You've applied for that.
Yeah.
You're still waiting, right?
Yes. We're waiting. I think usually, in execution, we've got to work very closely with our Chinese partners and regulators. But I'm confident to say that we're making very good progress. For China, opening is a matter of sooner is better than later, and a more bolder at this moment is better than, say, step by step, very cautious type of opening.
But does that include to the American banks like J.P. Morgan who want
should,
eventually?
And it will.
Do you think they will use that as a retaliatory tool?
Well, it's not a retaliatory. I think opening the financial market ultimately, in final analysis, is good for Chinese financial market development, given we lack the kind of institutionalized market. For example, we've seen the northbound as a result of MSCI inclusion of Asia. We see $35 billion inflow into Asia domestic market since January. Now, of course, one can say the market has already declined by something like 20 to 25%. So there's a value to be found here. We do believe that whoever investing for the purpose of long-term growth and value now probably is one of those windows that is emerging.
How do you see UBS picking up the slack, if you will, if the U.S. banks are not allowed in as much or in the underwriting or in cross-border deals? I'm only speculating there.
Sure.
How do you say, let's for example, cross-border M&A in 2019?
I would say up front that we're not grabbing market share necessarily from the fellow international banks when you talk about cross-border and also domestic capital markets transactions. We're more of saying, let's grow the pie together. To your point, I think the cross-border M&A will continue. Maybe after reaching the peak of 2016, the headline ticket size will reduce somewhat, but you tend to see more deals, more diversified industry, more targeted mid-size or smaller deals, which is good for Chinese company and good for target, because there is a need for Chinese capital in many cases. The other thing is China is never a hostile bidder in most of the cases when it comes to M&A. So China tends to be more friendly shareholders.
Now, your group CEO, Sergio Armati, recently telling Bloomberg News that there's no real reason right now to downgrade any any of the financial outlook for the group. How about China in particular? Is it looking better than the global average, or is it worse because of the trade friction?
Well, no, I think the financial sector typically grow at 1.5 to 2 times of GDP. Look at what the China GDP level is. So we still anticipate for our business in China and cross-border for China should still grow at that kind of ratio to China's GDP growth. So we are good and we are expanding.